So another question that really, bothers me, which I would like you to help me out with is, how do I resist this temptation of tampering with my long-term investments?
It's a good question, Ashwin. What people have been taught and have sort of absorbed is this is long-term, I don't need to touch it, I don't need to play with it. If you think about what happens in financial markets, the big institutions are the ones who dominate all the trading.
Right.
The mutual funds, the pension funds, who are supposed to be the classic long-term investors, are always tampering with their investments on a daily basis.
Right.
So why would they do this? They have portfolio rules, they do all these kinds of things.
Right.
But that little bit of tampering is kind of hard for humans, whether you're individuals or portfolio managers,
Right.
to resist. What we preach is long-term, buy, hold, forget.
Correct.
Very easy to teach, very hard to do, right? We also say sometimes that, monitor your investments on a regular basis, but that kind of comes close to tampering as
Correct.
well.
Correct.
One way to resist this urge to tamper, or to reduce the urge to tamper, is, say you're sitting on a nice profit on a portfolio or a stock. Take partial profits. Get this urge to tamper out of your system.
Right.
And take some profits. Maybe after the profits are taken, the stock runs up a little bit.
Right.
You can always buy it back. Then you've got rid of that urge to take the profits and run, but then you can always buy it back. Easy to say again, hard to do sometimes still. You're stuck on a price at which you sold it. Now it's gone up 100 rupees higher. And you're like, I just sold it at 300. How can I buy it at 400?
Right.
This is a behavioral phenomenon called anchoring that kind of, tampers with our investment decision making. And on our site, we have a whole piece on decision making for investors, how psychological factors like this actually affect wealth creation in some fashion.
Right.
So the site will tell you more about this stuff.